Every 4 years, candidates or the current president are proposing new tax laws that can benefit you or they actually can affect you. And in this video, we are going to do a deep dive into President Biden's new proposals and how they actually can affect you. Now, you might sit here and think, oh my gosh, this is just for the rich. This is not for me. There are two laws that he wants to pass that actually you just don't know about them, but you can use it to create wealth just like wealthy people do. My name is Anna, and I run a virtual real estate CPA firm where we help clients all over the country play the IRS game just like the wealthy do. A lot of the strategies that my clients use are purchasing their first rental property that will allow them to create wealth for the future of themselves and for their children. And this is something that if that's what you want to do, there's a couple of changes here that might affect you. So let's get right into it. Let's start with the easy one. If you have not filed your taxes in the last 5 years and you owe more than $250,000, he wants to charge those people with a felony. Right now, it's a misdemeanor. According to the IRS, more than 10 million people fail to file their taxes, which is mind-blowing to me. There is a free e-filing on the IRS website that if you make less than $74,000 a year, you can file your federal taxes for free. There's also other companies that are pretty cost efficient that you should be filing your taxes every single year. The second one does affect only those who make over $450,000. He actually wants to increase the current tax rate from 37% all the way back up to 39%. Third, he wants to raise corporation taxes. Right now, corporations have a flat tax rate of 21%, and he wants to make that 28%. Let's talk about those who have rental properties, or if you don't have a rental property, but you want to get into the rental game, this can affect you. He wants to limit the amount of 1031 gain that you don't have to pay taxes on. So let me give you an example. If you have a rental property because you're like, hey, I want to change the wealth for my family, and you decide to buy a duplex. And in 3 to 4 years, you're like, okay, I'm done with this duplex. What I want to do is I want to go bigger. What you can do to avoid those taxes is do a 1031 exchange. In other words, if you want to sell your duplex and you want to buy an apartment building, or maybe now you want to buy storage units, you can sell that duplex and use those funds to buy a like-kind property. In this case, whatever it is in real estate, the gain that you have in that duplex, as long as you use all of the funds to buy a new like-kind exchange, you don't have to pay taxes on it. So let's say, for example, you buy a duplex for $500,000 and you turn around and sell it for $1 million. You have a $500,000 gain. Right now, you don't have to pay taxes on it as long as you follow the rules. But let's say that you buy the same duplex for $500,000 and you sell it for, we're just using different numbers, $2 million. You have a $1.5 million gain. What President Biden wants to do is he's saying the first $500,000, that's excluded. The remainder, you actually have to pay taxes on. So you will have to pay a long-term, most likely capital gains tax on that $1 million, even if you do a 1031 exchange. The next one has to do with net investment tax. If you don't know what that tax is, it is a tax imposed on certain investment income. At the moment, it's at 3.8%, and what he wants to do is raise it to 5%. This would only affect those individuals who are making over $400,000. Now let's talk about the one also that you don't know about, but this is how wealthy people actually create their wealth. It's called the Roth IRA. And what Biden wants to do is he wants to close that loophole of doing a backdoor Roth IRA for those individuals who are making over $400,000. So let me explain to you how this actually works. There is a thing called self-directing your IRA that you probably never heard of, and I have a video on it. Essentially, what wealthy people do is they make their Roth IRA really, really big, and then they buy things in their IRA. And when I talk about things, it's such as real estate, they invest in companies. And as that money grows, as long as it's in a Roth IRA, they will not have to pay any taxes when they distribute that money. Let me give you a super quick example of what I call a home run. Is this going to happen with you? Let's hope so. But this is a really good way of you understanding how wealthy people actually create their wealth. A strategy that you might not know about, and there actually are President Biden is actually trying to put a stop to it is self-directing your IRA. Now, what is self-directing your IRA? I think the best thing to do is give you an example of how it works, and then I'll show you and I'll talk about how he's trying to stop, and you'll see why he's trying to stop this or limit it. So Peter Thiel is a former PayPal CEO. He actually invested $2,000 from his self-directed Roth IRA. Keep that in mind because that makes a huge difference. And he bought stock into PayPal. He continued to do that, and it is now believed that he has $5 billion in his Roth IRA. $5 billion. Now, how did he do that? He invested in companies, and then when they went public, he also invested in Facebook. So when it went public, it is now believed that he has $5 billion in his Roth IRA. Why is that important? Is because if you did not know, you can actually buy assets in your self-directed Roth IRA. The cool thing is that he invested $2,000. It is now believed to be at $5 billion. And that gain, he's not going to pay any taxes on it when he distributes the money. It's a wild concept. So that means the IRS is not going to get any money on almost $5 billion of income. So what Biden is saying is like, I'm tired of that loophole, so we're going to close that. So what he's trying to do is, for anyone who's making over $400,000, he's saying you are no longer allowed to do this little backdoor Roth IRA. So what that means is, let's say you work a W-2 job at Chase, and you have a 401k of like, let's say $50,000, right? And you decide to leave and become an entrepreneur or whatever. You decide to move to US Bank. What the backdoor Roth IRA is, it allows you to take that money, and instead of actually putting it into a Fidelity, you can actually roll that over into a Roth IRA. Yes, you have to pay taxes and the penalties and whatever, but if you can do a minimum what Peter Thiel did, you can buy rental properties in your Roth IRA. You just put in $50,000 into a Roth IRA, and you can grow that. You can have control of your own money and grow that and actually grow your wealth. This is one strategy that wealthy people use to grow their wealth. And he's trying to limit that. If you make over $400,000, hey, you're not allowed to do that anymore. The last change that really could affect people is long-term capital gains. So if you make over $1 million, what he wants to do is tax your capital gains at your ordinary tax bracket, and that could be up to 39%. So hopefully this helps you understand how these affect you, but also helps you realize that you can use your self-directed IRA, a strategy that a lot of wealthy people use, to actually create wealth.